Good morning. It is Friday, January 24th, and we made new all-time closing highs yesterday ahead of the major catalyst next week. Are you monitoring the risks on the tails and watching the positioning? Do you know how it changes, and do you know where to look as our students do? Let's get you prepared for today and the end of the week, as well as get you started for next week. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Today on the Catalyst, we have consumer sentiment at 10 a.m. Eastern, and that's really it as we head into the end of the week. We've made our move up to our upper rotational pivot, which was from our weekly COT plan, and our end target is 61.75 that we put out earlier in the week, and that is still going to be our target if we stay to the upside today. From a positioning standpoint, commercials are short on the COT, but again, not near triggering levels or anything. They did cover into the drop over the last month as we expected, and now they've created some room in their books to continue to add net short and provide liquidity in the markets. At the same time, we've seen fund managers now buy back 20% of their portfolios. So they're now back to 86% invested. And that still says there's cash on the sidelines. We're looking to get to that 100% mark where we start getting running out of cash, start buying on margin to signal a top coming in the market. At the same time, our insurance funds and systematics are 80% invested. So again, we've gone from 60% invested at last week's lows to 86% invested now. These funds are all chasing performance. They're all chasing the price higher. And we see that in our positioning indexes. But this move up is all that money. Again, we can't, if there's too much money on the sidelines, we can't continue to go lower. There's nobody left to sell. So now we'll wait until there's nobody left to buy. So we'll continue the push, continue the move. Probably get a pullback here in the next few days to reload, but we will look, as we always do, for those to get extended where there's no more money, and then we can see bigger downside take hold for a multi-week trend, as we saw in July of last year into August, as we saw into March and April of last year. It's the same thing we're going to watch for again this time. And we have our systematics have a $7.5 billion bid today, as long as we stay between 61.38 and 61.70. But even outside of that, we're looking at a $6 billion bid, so the market will be supportive from this participant. At the same time, our commercials and market makers are in risk absorbing mode as long as we hold 60.62. That is where the line in the sand is today and our big level that we need to pay attention to. So we know that being over the line in the sand favors upside. We have a buyer in the market today, so this can be used for distribution. So we could see a move back into yesterday's range and back under 61.38. If so, we will look for the market to stay inside of this 2-day range between 61.19 and 38. If we stay over 38 to 40 here, we're going to look for that push up to 71, 72, 75 that we put out at the beginning of the week. If you have any questions or you want to learn how to read the markets properly, feel free to check out our Discord for our website for our Discord offerings or our class offerings that are starting again soon. And if these videos help you, like and subscribe and let us know what other instruments you'd like to see us go over. Have a great day and stay safe trading out there.